So, good afternoon, everyone. Thank you for joining us on this knowledge series session for the Lakshmi India Finance team. So, we have the honor of having Deepak ji, who is the MD of the company. I'll quickly go through 4 5 slides to give you a flavor of the business, and then we'll start our discussion. So, just hold on for 1 second. So, Mr. Deepak Vaid is the MD of the company. He is a first generation entrepreneur with about 2 decades of experience in financing sector. And he has been actively involved even in social and community organization. And he has been responsible for building the company to where it is right now. So this is the footprint. Started in 93, 94, acquired NBFC license in 2011. Now currently 170 branches and having a diverse portfolio, doing secured lending largely to MSME, mortgage loans, business loan, LAP, personal loans. Also, commercial and non-commercial finance. It's headquartered in Jaipur, and they invested a lot in technology, so fully tech-enabled NBFC. This is how the scale-up has happened from 200 crore, AUM in FY18 to now 1451 crore. So very impressive growth rate the company has registered. Fully diversified lending profile, granular ticket size, and largely, secured lending. They have a little bit of personal loans and business loan, but that's a very minuscule proportion. This is the last 9-month performance. AUM 1451 crore and PAT of around 29 crore. Return on net worth is 11%. Return on asset is 2.53%. The concentration of the branches, as you can see, is largely Western and Central India. And NPAs are at 2.4%, net NPA 1.4%. Strategic priorities, largely operating leverage. They can reach to ROA of 3.5 to 3.75. So that is what they're targeting. AUM growth of 30%. Diversify their borrowing and liability franchise, and remain at the forefront of technology advancement. So let me stop here and start our discussion. So Deepak, welcome to this knowledge series. I wanted to start with your journey. How did you end up in this lending business? Is it like family thing, or you started on your own? Can you just take us through your journey, please?
Yeah, sure, Rakesh. Thank you, sir, for this opportunity. So first, yes, my dad started this business in 1991 in a proprietorship firm named Deepak Finance and Leasing Company. And then it was going very well, but unfortunately in 2001 we lost him. So I am the only son, so I have to accept it, and I have started my journey in 2001. Like I was in school, so I made myself like morning to afternoon school, afternoon to late evening the office, and late evening tuitions and all. So this journey actually this started in 2001 when dad passed away. But blessed with a good employees and good staff those days who have given me a good understanding of the business and all. And I've got a good support from my family members also. And then manage my routine, school routine also, the evening office routines also, and went till this completed my graduation. So after graduation, I started a BC model co-lending, you can say, or BC with HDFC Bank and a mass finance. There, what my strategy was, like all refinancing I used to put in my proprietorship firm, and all new vehicle funding where we used to put in a file in a HDFC Bank and a mass finance. So this
Okay.
gives us very much confident. Yes, we can create a history and we can do a good business. So by completing this, almost 5 years, I have done this co-lending business with mass finance and HDFC Bank. After completing that in 2011, we bought this NBFC called Lakshmi India Finlease Cap Private Limited and merged the complete business of a proprietorship firm to this Lakshmi India, and the new growth, new journey started, a new brand and new strategy and all.
Okay. So, can you take us through, what are the segments, which are the segment you entered first, and how you have been adding those, new. I read somewhere that you started with vehicle loans initially, but
Correct.
now I see that your focus is more on MSME. So, can you take us through the journey on the products? How were they introduced, and what are the sizes now?
Yeah, sure. So basically, we were known as a vehicle lending business. Their main product was vehicle lending, new and old. But yes, what we when we started opening the branches in a rural, in tier two, tier three cities of the state, we found that people need a money for a business purpose also, and for that they are ready to give security as their collateral as a residential or a commercial, which they were ready to give us, and they were ready to pay in the repayment in the installment. So
Hmm.
what I thought here, this is a really very good opportunity for us. So what we tried that in 2015, we added one product called SME MSME loans, where this money, this sanctioning or this amount was given to for a purpose of a business expansion, and we started taking as a collateral as a residential or a commercial properties from the customers, and we started doing we started doing this business in the first tried to start with some of the branches, but after this I've seen the success and the demand, and so I thought let's start with the complete branches, and this went very well. And we can say that we are the very in initial state pay, if you go to see, we were the pioneers in this product, by where with this money was given and monitoring was also done, that this they use this money for their business expansion. So majorly today, if I talk about, yes, our main 84% book consists of SME MSME loans, where we have a security as a collateral as a residential or commercial property with the LTV of 45 to 50%. And if I talk about the overall collateral LTV, that comes to almost around 42%. So we can say that we are very healthy in a LTV side. And our second major product is a wheels. So in this wheels, we are doing refinancing old vehicles, like 10 to from about 3 years to 10 years older vehicle, where we are giving these funds for for a buying of a vehicle, a commercial vehicle also, private vehicles, multi-duty
Hmm.
vehicles also. And
Hmm.
that is the second major and very small portion of a book. We have a personal loan and a business loan, which consists of almost 2% of the total bill. So this money is used for business expansion purpose and all. So
Okay.
basically, main focus today and in the future also, it will be towards the SME MSME secured lending side, which
Mhm.
we which I which is most preferred product, what I can say.
Okay. So, can you take us through the profile of these MSME, SME borrowers? Is this guys like, small-time business guys like a cycle chain, cycle repair guy, or what is the profile of these borrowers?
So basically, we believe that we can help these customer. We can help these stores like kirana stores, tea
Mhm.
shops, tent houses, the small aluminum factory, or carpenters who keep a ready product to sell. So these
Mhm.
customers are having a good, you can say that good sale and a good profitability also. So we
Mhm.
believe that we can help them in their growth, and we can, if by funding them, they also can also be support in the growth of the economy. So I believe that these customers are have a income source. They have a good sale. So these are customers base. What we are having are into the rural areas of a like state. So like Rajasthan, may we have almost 89 90 branches, which is in a tier 2 tier 3 cities, and
Okay.
similarly in Gujarat, similarly in MP, where these types of customers are, we call them as a NIP customers, non-income proof customers. So like
Mhm.
they don't have PAN card, or they have a PAN card also, that they don't file a returns and all, but they have having a good customer base, they have a good turnovers. So we evaluate their income by visiting them, by checking their process, by checking their diary. So we generally we everyone has a one common thing, like they note a complete day routine in a diary. So where how
Okay.
much they have sold out, how much they have sold in credit, how much they have sold in cash. So we monitor that diary, and we capture that diary. According to that, we take out the what excess cash income they are having. According to
Hmm.
that, we sanction, evaluate, and then we sanction the loan and take a property as a collateral from them.
Understood. So for these, I mean, obviously, these are new to banking kind of customers that you have. So there are no CIBIL scores to rely on. So you have to do a lot of groundwork to be able to lend to these guys. So what is the USP that we have? Because a lot of NBFCs are trying to do this. I know it's difficult, but what is the USP we have? Is it our exposure to the geography that we know very well, or uh, how are we able to win the customer? What are the other choices they have in terms of getting loan from other institutions?
See, yeah, very true. We There's a competition in the market, and competition is growing, and I believe competition is always healthy for the growth. So these customers are like when we have started this business. So this was a big challenge to how to find out their income and how to find out the way where we can have a transparency. So we have made our application or our team a strength in that way that it is for them it is very easy to find out the excess income or really what income they are earning on a monthly basis, and by evaluating then we can take a call. So we our systems are so robust that we can find out income of any person by just visiting their store or the shop. Like if I give an example of a carpenter, so we know that carpenter has a cut of 30 to 35% in each board. So what we do is that we find out that how many boards he is getting in his shop and how many boards he is cutting. So
Hmm.
that according to that we evaluate his their income, and then on the basis of that we find out the income what he is earning. Similarly, if I talk about Kirana stores, so Kirana stores may what happened then if a Kirana store is selling a Colgate, let's say, so he is getting a fixed margin of 7 to 8%. But
Hmm.
yes, if he's selling some local product over there, and then that product price is also cheap, and his earning becomes 20 to 25%. Similarly, with the loose grains and all like this. So what we do is like when we visit, so we find out the what actual business he has. According to that, the questions arrives in front of credit guy, and then after this, the questions are asked. Automatically, the CAM and all is prepared. According to that, we evaluate his income. Second, what cross checks? What we have many cross checks. Like we take a guarantor in a deal, which is compulsory. We cross check with the neighbors also. We cross check with the nearby kirana store or nearby pan ki dukan, where
Hmm.
generally we find out how is his behavior, he takes in credit or he takes in cash. So like this, we evaluate through different ways. And the second and USP, you can say that why credit cost and all are very well maintained. So because of the reason that we are taking the complete family in the deal. So like
Okay.
if let's say father is taking a loan, so his complete family has to come into the deal, and then everyone has to give the sign the documents, and including the ladies SPTCs what we are taking. So this makes us a little bit different from other, you can say that, and by giving no diversion in this, so we are able to maintain the portfolio and the credit cost and all.
Acha. So I was coming to that in terms of collateral. I mean, obviously, you mentioned that you take their house or the business premise as collateral, and meaning obviously there's a sentimental value for them, so it's one of the best collateral that one can have. But how difficult it is to implement because there could be multiple. You said that you get the whole family in, but there could be like multiple brothers who would have a say in that property. So uh, how do we manage these kind of collaterals?
So these types of collaterals are in our rural areas, of course, and where minimum 40% development is required by us. So these 40% development may whatever comes out, either a residential or a commercial property, that customer can mortgage with us. But
Okay.
here, if anyone who are the legal hirers of this property, either is a father, mother, brother, or anyone in the family, then everyone has to come into the deal so that there is a no conflict in future. Because these customers, we are very strong on our this security side. Security means collateral side. We don't take any, we don't give any privilege. We don't get any deviation over there. Our four corners has to match. The property has to get mortgage. The registered mortgage is compulsory for each and every property. So
Okay.
that's we take that documents makes us very confident of giving these loans.
So normally, I'm not sure whether these rural areas have those ready reckoner rates or not. But how do you value these properties? Because it can be difficult sometimes to value these properties.
So yes, so what we do is that we have our vendors. So who go and visit, who cross checks the with the neighbors also, and then finally we get a good value. We get a valuation of the property. And the second, the major is that whenever we open a branch in any of a state or any pin code, what we do is that we do exercise before only that what is the per square meter or per square feet rate over there. So and we have fixed up a construction cost also to 800 to 1000 rupees on the
Okay.
basis of construction. So we have two things. We have a self valuation of our properties where we are funding, and second we are also we are having a valuer from the third party, which is registered valuer from the government side. So
Okay.
after getting this valuation report from both the side, whichever is the lower, so that we then according to that we take a LTV.
Okay.
And
So
properties are so self-acquired by customer or so either it is a commercial, so self-acquired. So what we get, we check with the neighbor also the price of the property. So the gap is very minimum.
understood. So I hope Deepak, you got your answer. So just wanted to check, how do we source our business? I mean, we have 140 branches. So are the customers largely walking in, or do we have a feet on the street, or is it through DSA? What is our approach on sourcing the business?
Yeah, so Rakesh, today we are having 170 plus branches, and
Okay.
we are having footprints in five states, that is Rajasthan, Gujarat, Madhya Pradesh, Chhattisgarh, and Uttar Pradesh, and we are planning to add Maharashtra also by this year. So what we do is that we open up branches directly, our own branches, where we hire our own employees. So we have 1753 employees across these five states, where we are directly approaching to our customers, and they are able to they are when we open the branches, we hire a local team over there, so that what happens that they know the place and they know the customer behavior also, so which makes easy for us to approach to customer also and to select a customer also. So in that way, we do a lot of exercise before opening the branches. Like we do a lot of advertisements, we do road shows over there. We have a wheels where Lakshmi on wheels, what we call. Then we have a where we are putting a mic on a car and doing a publicity and all. Then we participate in a mela also over there. So we do a lot of activities. We have a different department in company who takes care of our field advertisements, and through which we are able to onboard the customers, and and then after that the complete process is also done by in-house by our own credit team, own collection team. So we are saying that we are our 100% MSME customers are onboarded directly with our own team. Yes,
Okay.
but on a wheel side, we have a DSAs. Like these DSAs are the car bazaars, like Spinny and all these things, Car 24, who's do a
Hmm.
sale purchase of vehicles. So they pass on the leads and then we complete the leads. But each and every customer is visited by our credit team. So there's a transparency between the company and the customer.
Hmm. Nikhil has done some ground research on us, and he said that he put a lead on a WhatsApp and also on a central calling line, but he hasn't got a follow-up call from our team. So, do we have this kind of facility where people can just do a WhatsApp and central line? Is it there? And uh,
So yes, we have a WhatsApp chat box, and we have a platform called Lakshmi Mitra app also, where you can apply loan for some. This application is also very good and different in this, where you can earn extra. So
mhm.
we advertisement की extra income चाहिए तो download करो Lakshmi Mitra app. So
Okay.
what that app says that if you have any lead, you can pass on to us and you can earn incentive. But
Okay.
yes, that is available on a selected pin codes which where we are available. So where we don't have
Nikhil
our
would have asked at a location where you are not available, maybe.
So
Mm-hmm.
I don't know Nikhil is from where, but yes, Nikhil, I'll note down so that we immediately we respond by saying like which areas are and all are not
So,
available. But yes,
so,
surely we will.
so Nikhil is from Maharashtra, so maybe that pin code was not available.
Yeah, exactly.
Yeah,
So that
yeah.
must be the main
So,
reason.
so that removes one of the concerns that, you know. Okay.
So otherwise,
Uh,
sir, we have mechanism to call back within 24 hours, and we
okay.
drop also. Let me check with this lead what happened actually. So
Mm-hmm.
I'll get back to you on this.
Uh, okay, so very good. So we have largely, self-sourced this kind of thing. Let's move on to, the costing for doing this business, because if you are doing, what is the ticket size of the loans?
So the average ticket size comes to around 7 to 8 lakh rupees.
Okay, so, to do this small ticket size loans, what is the cost of sourcing? Because I saw that, currently you are doing around 1,450 odd crore AUM, and your operating cost is almost 90 crore or something like that. So,
Yes.
so sourcing cost and operating cost looks slightly on the higher side. It's almost coming at 9% or 8 to 9%. So, is it better to, source through DSA where you will be giving like 3%? Or do you think in the longer run, this whole sourcing cost will come down?
Yeah, Rakesh, yes, so we have a model like direct model approaching to a customer. So a little bit that comes with the expenditure. But
Mm-hmm.
the main thing is that how much clarity is your transparency you are maintaining with your customer is most important. So what
Okay.
I believe is this costing is going down on day will go down because a lot of now applications what we are applications we are using where this cost of will go down, the TAT will go down, and a lot of such application will give a real time, in fact, real time approach to a customer also. Or so this will help us in reducing the cost in coming months. But yes,
Mm-hmm.
because I believe that if the case the customer, if you have a good relation with customer, and if they have a like a place where they can come and they can ask question and answers, so that is a best time for these types of customer, because these customers are little bit less educated also, so they believe or they trust that to have a talk one to one instead of give a mailing or instead of another other thing. So I believe this cost is little bit high, but yes, but still company is making a good profit. And after some this implementation of softwares, which is on a way in 2, 3, 4 months, it will be live. Like if I talk about this e-signature, which we are coming with new, the CKYCs, and also which will really reduce the cost and will they reduce the cost also, and the transparency will be much better.
Okay. So, so currently we are doing 1450 from 170 branches. So that comes to around 8.5 crore per branch. So what is our strategy going forward? Meaning, how much business can we do per branch? Is there any, target that we have in our mind? And uh, so next 2, 3 years, what will be the mix of new branches that we are opening and increase of business per branch?
Yeah, so Rakesh, so basically what happened that whenever we open a branches, so it takes time for break even. So our
Mhm.
break even time comes around when once the branch has reached to a AUM of 1 to 1.5 crores. So
Okay.
there you can say that now the branch is now standing its own feet. But after that, it started giving contribution towards a PNL. So what I believe is कि once the new branches take time, at least 5, 6, 7 to 8 months. But yes, the old branches are now who have crossed this limit is giving a good contribution. And if I talk about the approach or the business or expansion, so day by day, I believe the government is also approaching or focusing towards the MSME type business and these types of customers. So I believe these customers are having a good approach to a city now, and they are able to manufacturing at a low cost in their place and can able to supply at a better price in a city side. So these customers are growing day by day, and we can see also the Udyam certificates numbers are growing every year. So what we believe is that in this area the opportunity is very high, and whenever we open any branches in a rural areas also, we just cross check with a lot of media, a lot of agencies like Civil and all this. So where we pin codes, so that we can plan our pin codes accordingly, where we can get our type of customers, our pricing can match, and we can serve to those customers over there.
Okay. Understood. So, in terms of our target for profitability, meaning currently we are at 2.53% ROA, and we are targeting 3.5 to 3.75. So I thought to reach to that number, we need to improve our productivity, because when I look at our cost of funds, it's high, 10 points. But unlikely it is going to come down in a hurry, because we are a small size, so it will take some time. We are already lending at 21% or so. So there again, the scope is low to increase that lending rate. So then it boils down to all the operational efficiency. So, what are the possible measures that we are doing? Deepesh also asked the same question in terms of increasing the operating leverage, or what can we do to improve the product, our ROA to 3.5 to 3.75 that we are guiding.
Yes, so there are the two ways, cost of fund, of course. So now I think so our cost of fund has come to 10.94%, which have reduced almost 64 bips. And cost of fund, and now we are approaching our rating agency also. So we are A- rated right now. So we are approaching our rating agency. So we are expecting some good outlook, positive outlook by this financial year only. So in the coming months only. So once we get one notch up, so our line from especially the big banks. Big banks, like if I talk about PSU banks and or ICICI, HDFC Bank or not. So if these windows will get open for us. So once these lines and windows will open for us, then our pricing, what we expect is that we will touch somewhere around in a single digit. So that will help us in our ROA. Second is the quality. So we are very focused on our quality side. We do a lot of we have different departments. We are using again softwares, AIs, where we are able to find out our risk, and we are able to find out a way how we can control the risk and credit cost and all. So that is a second line what we are developing. We have, and we are improving it much better way to have a better to reduce our cost, to reduce our credit cost, and we can add to return on asset. So that is a way we can tell. If anything, Piyush, you want to add in it?
So basically, one is the cost consolidation of the borrowing is actually required. So any which ways, so my team is working very hard for that. Though the incremental cost of borrowing as of now is stood to around 10.30. So but including the legacy issues, it's right now is 10.94 as of now, as on this. But I can say that being 47 lenders is a large liability franchisee which Lakshmi is having as of now. That becomes major backbone for the company as well, because seeing the scenarios in the various economic scenario, or I can say that the money market is very volatile. So the large liability franchisee becomes more, I can say that, lucrative for getting a borrowings as well. So there is a competitive pricing benefits will be there. Going forward also there will be a strategy in respect of getting a certain off-book transactions that we are doing frequently, that is a direct assignment transaction, though our books falls into the PSL lending, priority sector lendings, that give an extra edge for the company for getting a loan or downsold under the transaction under the structure called DA, direct assignments. Secondly, listed transactions, we are also coming with certain listed transactions, that is a listed entities very soon. Thirdly, we are also mobilizing the funds from term loans, that is a plain vanilla term loans that we are having. Fourth, we have our tier 2 capital as well. So that's how we are managing our treasury bill.
Can you just elaborate a little bit more on, what kind of funding is coming from term loans, and how much is coming from NCDs? Do we issue commercial paper or not? And Nikhil has also asked a question on the rate at which NCDs are being issued. So, can you just do a breakup of the borrowings?
Sure. So basically, as of now, around 60 to 70% of my entire borrowing is from banks. But my incremental borrowings from banks have been increased to 82% as of now. So we are more focused towards the consolidating our borrowings towards the bank and least focused towards the NBFCs. The reason behind is to get the benefit of interest rate, which is in the declining scenario that we see so as of now. Thirdly, I say that the commercial paper is not our cup of tea because it's a short-term paper that is 12 months, that is unsecured as well. So, and vis-a-vis the asset is not of that view. So, I mean to say that the ALM, which is, we are not having any product which is less than 12 months kind of thing. So, we are not taking any loan in respect of getting issuing our commercial paper and getting a loan and deploying will be a challenge for that. Thirdly, the NCD point of view, have listed our NCD last year. So that is coupon was 1100, 11 and a half. So as of now, we are coming with sub 11 levels very soon. That will be a listed transaction. The quantum will be roughly around 50 to 80 odd crores.
Okay, got it. So, just to summarize, that we are more focused towards bank lending, and with the rating upgrade that we expect, so probably our cost of funding will come down at least by 100 to 150 basis point in the next 1 to 2 years. Is that correct assumption?
Correct.
Yeah. Okay. Great. So now coming to the other part of the question on the operating expenses. What do you think can the level of AUM per branch we can go to? I mean, currently it's around 8.5 crore, but what can we target in next 2 to 3 years in terms of, can it go to 15-20 crore? Is there a potential in these branches, or the density or the borrowers are not there enough to reach that kind of numbers?
So, sir, we are targeting new territories as well as new branches in the existing territory also. With the growth rate of around 30% year on year. This year it was a bit slow, but we have all the resources in place. We have opened some branches, and some branches are in the pipeline to open financial year. And all these branches will contribute business in the coming financial year. And also we have some good pipeline to open branches in new state called Maharashtra in the first quarter, or maybe first or second month, April or May month only. So as far as the branch AUM is, definitely the branch AUM will also grow by around 25 to 30% year on year basis.
Okay. Okay, understood. So operating cost, meaning what is you said the break even is 1 to 1.5 crore per branch AUM.
Right. Yes,
So currently, do we have any centralized system through which we can reduce the cost per branch? Maybe underwriting, maybe compliances, maybe collection. How do we do that? And is there any scope to improve cost efficiency there?
So the cost includes everything, not only the sourcing but also after sales or maybe credit or underwriting and other costing also. As far as the underwriting is concerned, so we have a very stringent process. Like every customer is being visited by the credit person, then he will analyze all the income of the customer, then he will recommend that case to the higher authority. So visiting person is different and the decisioning person is different. We do KYC checks, we do all the KYC checks from of the customer. We do search, we do survey, we do CKYC. Then after we do risk analysis also. Every case is being the valuation of the property is being done by the vendor. Then after we have internal technical legal team who vet the report for the valuation as well as for the legal. So overall filtration, overall compliance we are maintaining so that to reduce our cost in terms of the collection also. These all are the centrally implemented with the technology advancements. Like we have implemented the mobile application for sourcing person. We have implemented the mobile application for the PD person. Then after the complete desktop version for the case movement, and then after RCU risk, all the underwriting, all the case checks are happening on the system level. So these things we have implemented to increase the efficiency.
Okay, so Dipesh had an interesting question on the evergreening of loans. How do we handle those kind of situations?
So by including all the checks like checks on the KYC, did you where the customer is existing, or maybe customer has applied to us, or we have declined in the past, by searching over the KYC, by searching over the civil bureau. Every customer's bureau is fetching through the through integration and sharing on the application by checking all the other documents with the RCU agency and all. So by this way we can stop the evergreening method. Otherwise the evergreening is not at the customers, not at the employee only, but we are implementing all the checks, all the KYC, all the documentation checks to reduce that.
Okay, so Dipesh has a follow-up question that do we give loans to family members of defaulting customers?
No, not possible.
Not possible at all, because if we are taking all the family members on the deal, so
Okay.
by the meaning of taking all the family member is that if anyone is default history or anything, then we cannot consider that case.
Okay, so now coming to collections, because our customer is largely, unorganized. So how do we do collection? Do we take post-dated checks, or is it, cash collection? And what percentage of collection is actually, in cash, and how much comes in check or directly deposited?
So yes, we do take the SPDC from the repayment person, as well as there is one lady co-applicant which is mandatory, and one external guarantor which is mandatory. So either lady or external guarantor, we do take the SPDC from one of them. So this is the first step we are doing at the sourcing. As far as the collection, so around 35%, 65 to 70% is the first time clearance, and then after the collection is happening, out of that around 40% is coming with the cash, rest is coming through UPI and other methods. The strategy of the collection is like we have the complete hierarchy in the collection. So there is a national collection head, then zonal collection head, then regional collection head, then TL, then the frontline guy. So one person is taking care of at that particular location. As far as the new branches are concerned, so up to 100 customers, branch is doing the collection. Then after reaching to the 100 customers, we are giving one collection executive, and so on the addition of each 100 customers.
So what is our collection efficiency now?
89%.
How much? 89%.
Yeah, so current due versus is 89%.
Okay.
And we have implemented recently this new application where we are transforming all this cash collection to a UPI online transaction, where we can send a message to WhatsApp, a link to a customer, and through which they can just pressing a link, they can send us a payment, and it is integrated with system. So it's so robust that it reflects within a seconds in the system also in a LMS which we are using. So we are reducing our cash collection and going towards more on the banking side.
Okay, understood. Himanshu, look, let's take the Harsh question on employee cost. He's saying that the employee cost has increased from 17 crore to 19 crore this quarter with no additional business. So is it some new branches that you opened which are yet to?
Yes, so as we have opened the new branches this year, so we have ordered we have added almost 2023 branches this year, exactly at number if I'm not wrong, 2023 branches we have added. So that has come, and little bit due to Q2 was little bit slow, but if you compare a Q3, it's a bumper for each and every sector in this sector. So because of little bit Q2 slow, this hype is not matching to thing, but otherwise we are very comfortable on our profitable side. We are comfortable on the expansion side, and we are expecting a good business in the current quarter and the coming quarters. So this is I believe that this is an expenditure what we have this is an investment what we have done. The return is we are waiting for the return and expecting a good return also.
Is there any one-off because of the labor law changes, etc.? A lot of companies have reported that.
Yeah, so we have also made a provision of that.
44 lakh rupees.
So 44 lakh rupees provision we have already made it. So only.
So that is coming outside of this employee cost, right?
It is included in employee cost.
Achha. So part of that can be explained from there. Let's take Himanshu's question. He's saying that can you explain your direct assignment business model and what is the outlook?
So direct assignment business, so what we do is like we sell you mean to sell or purchase? What is exactly is there's a two DA we can say that we are purchasing also and we are selling it also. So if he's talking about purchasing, so yes, we are purchasing from different NBFCs books where from different NBFCs, and where we are giving them rights of a collection, and on every month basis they have to give us they have to collect, and they have to pass on to the at our interest rate they have to pass on to us. Similarly, we are doing a DA transaction with banks where we are selling our created books to them, and we are raising the funds. So basically this help in ALM also, and this reduces the cost also for us. So cost of fund goes down because as Piyush told that our book is come under the PSL. So PSL book is required by every bank. So our books is always in demand. So we get a good pricing over there. And similarly, we collect, and we are a collector, and then we can once the amount is collected, we pass on to the banks who have purchased our book. So this is a very common process in this sector, DA purchase and sale. So which we are doing it from last 3-4 years.
Okay. So now let's coming to the credit cost and NPAs. So we have questions from Akash and also Harsh that our gross NPA has increased. So what is the outlook there? Number two, Akash is also suggesting that we should give a trend of SMA 1, 2 in our presentation so that they get a better idea about our NPA situation. So can you tell us, why the gross NPA has increased? Harsh is also saying that it is maybe you attributed to DA. So is that the case? Because rest of the industry seems to be having the best of credit costs at the moment.
Yeah, so Rakesh, this is one DA transaction what we have done. This is a which we got burst, and this is very this scenario is in India is very less. Like any DA transaction, कोई कभी burst हुआ है बहुत, but it's not a common scenario. This is a very what you can say rare to rare has happened. And this was a Jalandhar based NBFC up money karke, so it has a AUM of 500 to 600 crores. And there we have done a secured DA transaction. Secured matlab we have purchased the secured assets. So that has got defaulted. So that is why this NPA have shoot up. Otherwise, my NPA, if you're going to see, the scenario must have been totally different. Like, agar ye nahi, let's say this event nahi hota, then my net NPA stands for 0.63 and gross NPA stands for 0.94. and the PAT which has which we are given at 29.10 crore PAT would have been 38.22. So there is a gap. The provision what we have created for this default is almost 8 to 9 crores. That is why the return on asset also has gone down. Otherwise, my return on asset is 3.31%.
Okay.
So
Okay.
return on asset is also would be better. The PAT has also been better, and NPA would be in 0.94. So I believe this is a one-time hit what a company has. This has come to company, but otherwise I believe and this is a secure transaction also. So I believe we will be able to collect it very soon, and this whatever collection we get so directly will be added to a PAT. So coming quarters, I believe the PAT and everything, the return on asset and everything, return on equity. If I talk about return on net worth also, it has come down to 11.04 just because of this transaction. Otherwise, the return on net worth is 14.31. So
Okay,
I
so
believe that I am very much comfortable in recovery of this. Plus the asset quality also I am very much. We and collection team are happy that we will be able to recover the amount very soon.
okay, so how much of provision is still left to be done for this, or is it fully done now?
So almost we have done almost 9 crores. So now more 5, 6, 7. Still 8 crore more has to be done.
So
If
that will come in the next quarter,
in Q1 that will come.
or in Q1 that will come. Okay,
Yeah,
understood.
next year Q1 will come.
Now, Priyanshu has raised a much deeper question on this. So why are we doing all this? Is it difficult to generate new business on our own? Because we are, increasing our branches. We have so many people on the ground. And so what is the advantage of doing that? And are we seeing some slowdown in acquiring new business?
No, so Priyanshu, well question. So what happened, Priyanshu? So whenever any company grows, so it has to grow from both the side. Like yes, of course, we are growing on a self-raised cases also, and we have to organically also and inorganically also. But yes, for inorganically for us means where we want to step in. We go there and we purchase a quality of book from there. So like if I want to start any business over there, then we try to do co-lending, we try to do BC so that we understand the behavior of a customer over there. We understand the process, of credit and cost and all. So this is for growth. This is done for the growth plan in future. Like you have already customer base and you already have the nature of a customer over there. So that is why we have done this transaction over there. But yes, this is if you want to see the organically also we are growing very fast. We are growing, maintaining our credit cost also, and we are able to maintain that in a similar line.
Understood. Any safeguards to avoid these kind of situation? Meaning, though it's rare.
Yeah, it's rare. Yes, we have added some new checkpoints. We have added more system-oriented things. Now we have started keeping the this all security also at our chest. So a lot of lot of action we have already taken. This. But yes, so this incident has happened not with us. So almost 35 lenders are there who have been affected with these things. But yes, we have taken a lot of checkpoints for improvising which was required. We have taken that. But I'm pretty sure that we will recover this money very soon.
Yeah, so this is my last question. When can we see some recovery coming in from this portfolio?
So I am also waiting. We are behind. We have done our best. We have put best efforts, and we have put our some best contacts also who are behind. So very soon we should expect a collection on this. Because
Okay,
this
so
is the rare to rarest thing, and this is a secure transaction. So आज नहीं तो कल he has to pay us a amount.
Understood. So let's hope in Q1 when you do your last provision, there's some recovery also coming in Q1. Okay, so what about our I wanted to ask. So largely, I think we have covered most of the things. But in the last 1 to 2 years, the gold prices have been going up quite high. So are there any, plans to do gold loan? It's growing very fast for most of the other lenders, and we have so many branches. So one, are our branches equipped to do this? Do they have space enough to cater to gold loan? And is gold loan one of the things that we're looking at?
In this, some of the players have really done a shown a tremendous growth in a gold loan. But yes, we don't have any such plans to enter in a gold loan right now, because
Okay.
again, this comes with a cost. So the branch structure, the manpower, and everything is required according to that. So we don't have plans right now. But yes, in future, if we get a opportunity, we can see. Right now, though, it's so very risky also, what I believe, because of the pricing and all. But yes, right now, though, we are very much focused on a secured lending, where we are very comfortable on our asset quality, and then that call only I want to take it, or we would take it.
So, what is our current, capital adequacy ratio, and are we comfortable to grow until what level we won't need new capital?
28 to 14%.
So the capital adequacy ratio ranges to around 28 to 29% as of now, as on December. So seeing the scenario, was the leverage, so the return on equity is a derivative factor of debt to equity and the ROTA as well. So we think so that it will be ranges from 4 to 4.5, that the debt to equity should be there. Once we reach that level, then the ROTA is optimum at that level. Post that, we will be raising a new fund.
Okay. And are there any, plans to do co-lending or to raise our ROE to 16% plus level? And you did mention about priority sector lending, because, so is co-lending is one of the options you are exploring?
So right now, though, we are focusing on our own book. So because we have a channel, we have a branches. So I believe that we can easily grow 35% CAGR on year to year. And I'm very comfortable. I believe we can reach to in this percentage. So we don't want to add a co-lending right now. But yes, after I think so, year or two, once this capital is consumed, we reach to that leverage. Then we can think of adding this co-lending with and shaking hand with some banks, or where if we get a good price or good things. But firstly, if we want to create our own book only,
Okay.
because
Understood.
we have a structure, so we have a distribution points. So I believe that we can create our own book is much better than creating for someone else.
Got it. So just trying to sum it up, we have enough capital to grow. We're
Yes.
looking to grow our AUM at around 30% or so. And our credit costs are going to come down because it's impacted by one-off event, which is going to go away. We might have some recovery, so actually it might add up next year. And our cost of borrowing is going to definitely reduce by 100 to 150 basis point. So our ROA, which earlier was 3.13 or somewhere, actually can go up to the range that we are talking about, 3.5 to 3.75. So are you comfortable with this guidance and the analysis?
Yes, very much. I'm very much comfortable that we have a strong team. We have a strong infra. You can say that strong capital base also, and I think so. Our investors are also strong to support us always. So I believe that we can reach to this targets what we have given in our calls and all, and very easily. But yes, we want to go for secured lending side where we are 100% safe and where the capital is also safe. So we would like to take a step towards profitability, where it's a good win-win position for the company also and for the investors also.
Okay. So Deepak was asking about 5-year growth plan. I was just calculating, we go to more than 5,000 crore in 5 years AUM based on 30% growth.
Yeah, very comfortable. So we have very comfortable. We have a robust system with us. we have a good manpower. So I think so. There should not be any barrier in between to not to touch to this numbers what we have told. But we're very comfortable, and the team is also very comfortable. Team, we have, if you want to see the team strength, the all CXOs who have a good vintage with the company, so that gives a confidence to everyone.
Mhm. Priyanshu wants to slip in one last question. Loan disbursement target in Q4 and FY27. So will you maintain that 30% rate or?
Yeah. So minimum. So if you want to see the past also, we have grown with a 35% CAGR on a year-to-year basis. So we will be continuing with that. So now that we have adding more branches, now we have a capital base also. We are getting a good line raw material also. So I believe that it will not be a hurdle for us to reach to this numbers what we have told. But what I believe that say less and deliver more. So I believe that I will deliver much better numbers than what I have given on the screen.
Perfect. Thank you, Deepakji. Thank you so much. Very excited to hear your story, and you've done incredibly well. The hardship that you faced, and you came out of this and built this such a strong business. So congratulations to you, and looking forward to more exciting times going forward. So thank you so much.
Thank you.
Thank you so much.
Thank you so much, Rakesh.
Thanks.
Thank you.
Thank you.
Thank you all the participants.